The following program is furnished by The Truth About Your Future, LLC. The views expressed do not necessarily reflect the views of this station. This information is education and not financial advice. Consult a financial advisor before investing.
The Truth About Your Future with Rick Edelman is brought to you by Bitwise, the world's largest crypto index fund manager, and by Global X ETFs, dedicated to providing investors with unexplored and intelligent solutions, and by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100, and by Edelman Financial Engines. Rick Edelman is a board member, consultant, shareholder, and client of EFE, but EFE is unaffiliated and has no say over the content of The Truth About Your Future with Rick Edelman.
This is where technology, innovation, and personal finance come together.
This is The Truth About Your Future with Rick Edelman.
And now your host, Rick Edelman.
And a very happy Father's Day weekend to you. I'm Rick Edelman. Welcome to the program. On today's show, the crash of crypto lender Celcius, a new credit card from American Express, current volatility and how to handle it. What is a permissionless system? What's going on with crypto with Bitwise's Matt Hougan? And this week's health and wellness segment by my wife, Jean Edelman. Well, the first thing we're talking about is crypto, and I know what you're thinking. Isn't this a sign of a market top? I mean, look what's going on with crypto this week. Crypto has crashed yet again. It's been in the midst of a crash for the last 9 months. It fell 50%, and then this past week alone, crypto is down 20%. You see, the traditional way, the way that most folks treat Bitcoin, Ethereum, and other digital assets is you buy it because you think the price is going to go up. But there's no income, right? There's no dividend. There's no rental income because it's not real estate. There's no dividend. It's not a stock. So along came a couple of companies, a whole bunch of them now, that offer to earn interest on your Bitcoin. Celcius was offering as much as 18% in interest. Well, now the company says it might be insolvent, and this has caused Bitcoin and Ethereum to crash. You've got to watch out about what you're doing and how you're doing it. If you're trying to get rich quick, there's a difference between investing in an emerging new technology that has massive opportunity for global commerce on a massive scale and trying to make a quick buck. It's one thing to invest in something as risky and speculative and aggressive as Bitcoin, and it's quite another to take that risk and pile on by placing it with an online site that offers to provide you a massive amount of yield, 18% interest rates. You got to ask yourself the question, why would somebody be offering 18%? Why would somebody be willing to pay 18% in interest when today's interest rates are low single digit? And that's the whole point. So if you're trying to understand crypto, this makes my book, The Truth About Crypto, more important than ever because, yes, I do have a chapter on yield in the book to help you understand how people are generating yield, the risks associated with it, to help you identify whether this is something you should or should not be engaging in. In the meantime, Bitcoin is down dramatically from just 1 week ago. As far as I'm concerned, that is a huge buying opportunity. We are in the midst of a mess here in the United States economy, as well as that globally, and it's not just crypto that is falling sharply in value. We've seen it happen in the stock market, the bond market, soon to be happening in the real estate market as well. This is the nature of a global recession, dealing with all the headwinds that you know all too well. Rising inflation and interest rates, coming increases in tax rates, still low employment rates, the supply chain problems, the issues with COVID lingering, and of course, dominating the headlines, the war with Russia and Ukraine. This means it's a very difficult environment. You need to be investing with a long-term perspective. Short-term volatility like we're experiencing this past week in crypto and the stock market overall, it's going to be with us for months to come, probably well into next year. If you're a long-term investor, it's a buying opportunity. If you're a short-term profit seeker, well, all I can say is, however you behave, you'll end up getting what you deserve. But just to illustrate that today's volatility is not having any adverse impact on the long-term development and expansion of the technology, take a look at what American Express just announced. They've just announced this week a brand new American Express credit card offered in conjunction with Abra, a crypto company. When you use this new credit card, you get rewards back, not in cash, but in Bitcoin and Ethereum. MasterCard's already been doing this, and in fact, MasterCard now lets you buy NFTs with its credit and debit cards. I just came back from a week in Austin where I hosted our annual conference called Vision. This conference, I know I didn't tell you about it. That's because this conference was exclusively for financial advisors. More than 200 financial professionals in the room over a 3-day period. The entire agenda was all focused on crypto. And we had some of the biggest experts in the field on panels and in presentations, including pension fund managers and the CEOs of some of the largest ETF companies in the world, all presenting and engaged on this. The excitement, the enthusiasm was palpable. Everybody acknowledging that this current market environment, as scary as it is, as significant as it is, with massive losses occurring over the past 9 months, has nothing to do with the long-term expectation of the legitimacy of this technology. That's what I call on you to stay focused on. If you are concerned about the risk of investing, whether it's crypto or stocks, then you need to be on the sidelines. But if you maintain a long-term investment portfolio, if you remain highly diversified, then you can only regard what's going on right now as an amazing buying opportunity. It was only 6 or 8 months ago that you were able to buy Bitcoin for $70,000. This past week, it was as low as around $20,000. Wow, if you liked it at 70, you got to love it at 20. And that's the focus you need to have in conjunction with your financial advisor. Should you allocate? If so, how and how much? And to help get those answers, I encourage you to read The Truth About Crypto, continuing to do really well, continuing to be a bestseller at Amazon, and we've just gotten a deal. We're publishing the book in Italian. This makes it 5 languages around the world that the book is being published in. I hope you'll pick up a copy now of The Truth About Crypto. You're listening to The Truth About Your Future. I got a simple question for you. Are you stressed? So's everybody else. 72%. They're not merely saying they're stressed. They're specifically saying they're stressed about their finances. That's an all-time high. And the reason is that we have other all-time highs. U.S. inflation, 8.6% in May, an all-time high, the highest level since 1981. Energy costs up 35% from last year. Groceries are up 12%, the biggest increase since 1979. Airplane tickets are up 37%, 13% in just the past month. And the Department of Labor says inflation is going to keep rising. Higher demand, well, it's because we're all emerging from COVID. Ukraine, meanwhile, is reducing supply. It's very hot as well. No rain, diseases damaging crops and livestock. All this is hurting farmers and ranchers and reducing their output. Fewer Americans are employed right now than before the pandemic. That's causing employers to raise wages. All of this is a perfect storm hitting the global economy. And I do mean global. The World Bank says the global economy might suffer 1970s style stagflation, weak growth, rising prices. We haven't seen this since the 1970s. The World Bank thought the global economy would grow 4.1%. The bank has revised it, says no, the global economy is not going to grow 4.1. It's only going to grow 2.9 and could fall to 0. Europe says a recession could occur there. We've got a lack of grain exports. That's hurting Lebanon, Egypt, and Somalia. China is suffering from its zero COVID policies and falling real estate prices. China's economy is the worst since 1990. In Sri Lanka, they just defaulted last month on foreign debts for the very first time. It's expected that other countries are going to default as well. Add it all up, the head of the International Monetary Fund, the IMF, says the global economy is facing its biggest test since World War II. And in fact, Europe is also simultaneously dealing with the biggest wave of refugees since the Second World War. In Egypt, the finance minister said millions of people could die globally because of the food crisis that's been triggered by the Ukraine war. Egypt is the world's biggest importer of wheat. In Egypt, more than half the population is eligible for subsidized bread. That's 70 million people. Until the war, it got its wheat from Russia and Ukraine. So yeah, the United Nations says hundreds of millions of people around the world are at risk of hunger and destitution because of food shortages due to the war in Ukraine. Russia's not letting ships leave Ukraine's ports. 50 million tons of grain is stuck. A third of Ukrainian crops and farmland is now useless. That's 27 million tons of wheat, corn, barley, all gone from the market. 57% of small business owners, as a result of all of this, say they expect conditions to get worse than they are now. Only 42% said that back in April. Small businesses have less cash on hand than big companies. It's harder for them to hang in there during an economic problem, as we witnessed in the pandemic, as well as back in 2008. Well, the S&P 500, not in a bear market yet. And investor complacency is the problem. Rick Reeder, the head of fixed income at BlackRock, the world's largest money manager, says the markets right now are like a Category 5 hurricane. But the volatility index, the VIX, has not yet reached worrisome levels. The VIX was at much worse condition back in March of 2020 when the pandemic began and November of 2008 when the credit crisis began. And so we aren't yet worried. You aren't yet panicking, are you? A lot of financial advisors say the markets haven't bottomed out until people start panicking. So hurry up and get on with it, will you? Start freaking out so we can hit the bottom already? I'm saying that only somewhat facetiously. A few weeks ago on the show, we talked about the oligarchs' yachts and how governments around the world are seizing them. And we talked about the economic implications of that. Well, I want to shift the conversation away from the yachts to the planes. There are 400 foreign-owned jets stranded in Russia. They are owned by leasing companies. They lease them to airlines. A Boeing 737 costs $100 million, $3 million a year to maintain it. All that aircraft sitting on runways in Russia, they're collectively worth $40 billion, and it takes $1.2 billion to maintain them. Nobody is going to fly these planes after the war because nobody's going to know what condition is that they're in. And that makes all these aircraft worthless. The leasing companies, therefore, are filing insurance claims for $40 billion. And the insurance companies, so far, are refusing to pay. They say that there isn't a declared war going on anywhere, and it's just a business issue if they can't fly the planes out of there. We'll have to see how it shakes out. And what are governments saying in all this? I'll tell you next on The Truth About Your Future. Stay with us.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
Allow us to introduce you to Jeremiah, an ordinary person who helped shape the future by putting his money behind the right ideas. Jeremiah's always been a numbers guy, from his days competing in the high school math league to now as the teacher who leads it. Jeremiah is also accessing the companies who are driving environmental innovations for the next generation by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a helioseismologist to help help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
Those who built their own financial success know that moving forward requires not just the right tools, but an in-depth knowledge of how to use them. That's why Edelman Financial Engines gives you a dedicated wealth planner supported by a team of experts. We know a modern wealth planning relationship demands human insight powered by advanced technology. Our advice is tailor-made for your personal goals, and our investment management approach is based on Nobel Prize-winning research. We model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. See what we can build for you. Call 833-301-4333. That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines. Built for those who built themselves.
Welcome back to The Truth About Your Future. We're talking about the current economic environment and the stock market volatility. What are governments doing in response to all this? Well, here's a taste of things to come, perhaps, in Singapore. If you want to buy a luxury car, you must first buy a government certificate that allows you to buy the car. And the government certificate is $73,000. Meanwhile, the Treasury Department says the Swiss, Taiwan, Vietnam, and others are deliberately lowering their currencies against the dollar. The yen is at a 24-year low. That's depressing its currency. Now, that makes it cheaper for us to buy their products. So if you want to buy a Japanese car, that car just got really cheap. But it makes it really expensive for people in Japan to buy American cars and other products. You see, when they lower their currency against the dollar, it helps their economy and hurts ours. It's not just Japan. China, South Korea, Germany, Italy, India, Malaysia, Singapore, Thailand, Mexico. The U.S. Treasury says they're all engaging in currency manipulation, helping their economies during this global recession, meanwhile hurting ours. The Treasury Secretary, Janet Yellen, says in the midst of all this, the Biden administration, in an effort to fight inflation, might reduce the tariffs on Chinese imports. In other words, we're going to make it cheaper for you to buy Chinese goods. What happened to the fight against human rights against China? I guess it takes a second seat to the fight against inflation. Meanwhile, how much of your money do you have in stocks? The youngest workers, according to a new study, have 92% of the money in their 401k in stocks. 92%. The average 45-year-old has 82% of their money in stocks. It was only 69% a decade ago. Even 65-year-olds have nearly half their money in stocks. You might not even know you're doing it. Why? Because in your 401k, you're probably investing via a target date fund. This is the most popular form of investing in 401k plans across the country. You buy one target date fund, a 2030 fund, a 2040 fund, a 2050 fund, and the fund provides you a mix of stocks and bonds. And if you have a 2050 fund, it could be 90% invested in stocks. Even if you have a 2030 fund, it could have half its money invested in stocks. Are you aware of how much you have in stocks, in your target date funds, in your 401k at work? So yeah, we've seen huge losses in the stock market so far, as well as the bond market and now the crypto market. We've seen massive price volatility in a single day. Since all this decline began last fall, it's fascinating how people are looking at what's going on in crypto and saying, gee, Bitcoin is down 20% in a day, 70% over 7 months. Well, take a look at the stock market. In a single day, Chegg fell 49%. Snapchat lost 43% in a single day. BuzzFeed down 41%, Facebook 26%. Target lost 25% in a single day. So did Netflix. In a single week, last February, GameStop fell 76%. Paramount in 1 week lost 52%. DocuSign 46%. Peloton fell 40% in a week, 53% in a month. We've seen huge losses. Year to date, Carvana's down 91%. Fubo TV down 79%. Shopify, Redfin, Rivian, Snapchat, Netflix, Peloton, they're all down 60, 70, 80%. Even Starbucks is down 37% this year, the worst since 2008. The list goes on and on. Desktop Metal, Teladoc, AMC, Barnes & Noble. The funniest part of all this is that people keep looking at Bitcoin. I actually heard one Wall Street analyst actually say to people last week that Bitcoin is a stupid investment because it's down for the year. Really? I guess he's happier with Peloton, Netflix, and Carvana. They're down 70, 80, 90%. At some point, all of these market declines will become a buying opportunity for stocks, for bonds, for real estate, for crypto. I just don't think we're there yet. One big reason, as I mentioned, you're not panicking yet. Investors have been amazingly complacent, but give it a little more time, maybe a few months, perhaps by this winter when we start to see things getting really bad, we'll start to see the panic. And that's when we'll see what you and your advisor are really made of. Given all the turmoil in the financial markets lately, it's time you understood crypto. Blockchain, Bitcoin, Ethereum, NFTs, DeFi, CBDCs, the metaverse. It's the future, and it's time you learned what everyone's talking about. Join me for my free master class on crypto. In less than 2 hours, you'll finally get to understand why there's so much excitement about blockchain, Bitcoin, and other digital assets. My master class premieres this Tuesday, June 21st. You can watch my master class on crypto online anytime. Sign up now for my master class on crypto at thetruthayf.com. That's thetruthayf.com. This is the truth about your future. In the midst of the current market volatility, we may have a scandal brewing. We'll talk about that next. Stay with us.
The Truth About Your Future is sponsored by Global X ETFs. Listeners to this show tune in every week to hear Rick Edelman and his guests talk about the personal finance topics that matter most. And if you're retired, or soon will be, you're no doubt listening for Rick's thoughts on retirement security and longevity. At Global X ETFs, we understand you may also be interested in opportunities to generate income, with interest rates still near historic lows despite an inflationary environment. Our approach to this challenge looks beyond what you might have considered, using asset classes that include MLPs, REITs, preferreds, and dividend-paying stocks. We have been managing these types of income-oriented strategies for more than a decade, with solutions suited to a range of portfolio objectives. Explore our full range of ETFs, research and insights, and more at globalxetfs.com, or speak with your financial advisor to learn more.
Need help managing the complexity of income needs in retirement? Meet Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Tell them how much you need and how long you need it to last. They'll estimate how much you can spend. Plus, you can start, stop, or adjust payments anytime without penalty. And with Schwab Intelligent Portfolios, you won't pay an advisory fee. Visit schwab.com/intelligent income to learn more about their modern approach to wealth management.
You're listening to The Truth About Your Future with Rick Edelman, sponsored by Choice. Choice is changing the way Americans save for retirement by making it possible to invest in Bitcoin, crypto, and other alternative assets inside your IRA. That's right. Whether you open a deductible or a Roth IRA with Choice, you can invest in Bitcoin and 22 other digital assets in your retirement account. You can also buy stocks, mutual funds, ETFs, gold, real estate, and more, all in a single retirement account. There's no hidden fees or account minimums, just more control over your retirement savings. And Choice makes it ridiculously easy to combine all of your old retirement accounts with a rollover concierge service. So if you've switched jobs in the last few years and have been putting off rolling over your old 401k, make sure you check out Choice. Head on over to retirewithchoice.com/Rick That's retirewithchoice.com/Rick.
Thanks for sticking around with us here on The Truth About Your Future. Some financial advisors are working really hard. The head of UBS Wealth Management has publicly congratulated a financial advisor at UBS. What did the advisor do? He made his 1 millionth cold call. This guy started in 1998. 24 years he's been a stockbroker, 5 days a week, 166 calls a day. That's 23 calls an hour, 3 phone calls every minute. They didn't congratulate him on how well he's serving his clients, only on how well he's harassing homeowners across the U.S. Merrill Lynch, meanwhile, sold thousands of clients Class C mutual fund shares instead of cheaper A shares. And FINRA has now levied a $15 million fine and restitution. Why would anybody be paying front-end load mutual funds today? Why would any financial advisor or brokerage firm be selling them? The only reason is because of the fat commissions they earn by doing so. You should be dealing with no-load funds, low-cost ETFs from a fee-based financial advisor, not somebody selling you a commission-based mutual fund that costs far more. A radio listener told me about this one. I checked with some lawyers. They seem to think there might be something to this story, so I'm sharing it with you. There may be a scandal in the midst of being uncovered. Let's say you invest in a venture capital fund or a private equity fund. You don't write a check. You instead commit to investing over a period of time. And occasionally, as they find companies to invest in, they issue you a capital call. And that's when you send in the money you've promised to invest. They have a high fee schedule, 2 and 20, 2% annual fee plus 20% of the profits. Now, you only pay a fee when you've invested the money. That's at least when you buy these investments from your registered investment advisor. But apparently there are now allegations that major brokerage firms are charging their clients the fee on the amount they've committed to invest, not the amount they actually did invest, which is a lot less. So if you promise to invest $100,000, but you've only actually invested $10,000, you ought to be charged on the $10,000. But these firms are apparently charging you on the entire $100,000 commitment. You should check with your firm to see if maybe that's happening to you. There may be class action lawsuits as this story progresses, and I'll keep you posted. And finally, Germany has 1,500 beer brewers. They're paying 400% more for electricity than a year ago. Barley prices are higher than ever. And the biggest crisis, there are no longer enough glass bottles to go around. We know there are supply chain issues globally, but this is too much.
If you've got the time, we've got the beer. When you're out of Schlitz, you're out of beer. There's only one Budweiser beer. Anheuser-Busch Natural Light. I'm from Milwaukee and I ought to know why Bats beer tastes great wherever you go. Schaefer is the one beer to have when you're having more than one. When you say Budweiser, you've said it all.
You're listening to The Truth About Your Future. We've been talking about the incredibly sharp decline in the price of Bitcoin and all digital assets this past week, brought on by a crypto lender called Celcius announcing they're suspending withdrawals, which has freaked everybody out. Imagine you've got a bunch of money at your bank and your bank finally says, oh, hey, sorry, you can't withdraw your money for a while. That has freaked everybody out, causing a big run, so to speak, on the value of the asset. And so to help us understand and unpack this, what does it mean? What does it mean going forward? How did this happen? I'm happy to bring onto the program Matt Hougan. He's one of the world's leading experts on crypto, as well as ETFs and financial technology. He's a crypto columnist for Forbes magazine. Matt, thanks for joining us on the show.
Thanks for having me, Rick.
Well, Bitcoin has crashed many times in the past. 7 or 8 times it has fallen 50% or more. But this past week, in just one day, it fell 25% in value. Talk about what happened and what your observation is about all this.
Yeah, this story starts really, Rick, back in November of 2021. As you remember, that was when the Fed started introducing the idea they may begin raising interest rates to combat inflation. That created a sell-off in all risk assets and drove Bitcoin's price down from $68,000 into the $30,000 range. What's happened since then is that price collapse has shaken the foundations of different parts of the crypto ecosystem. We saw the Luna stablecoin collapse. That shook the foundations of crypto. And now we're seeing this lender, Celcius, a well-established lender backed by serious investors, including pension funds in Canada. We're seeing it collapse as well. The old saying that, once the tide goes out, you see who's been swimming naked. We're seeing who's been swimming naked in crypto. It's important to note that nothing about this has changed the core capabilities of blockchain or the things that crypto can do for the world. But during any liquidity crisis, any liquidity cascade, you see these series of weak entities fail until you get to the solid foundation. And so the question investors are asking now, is Celcius the last shoe to drop? Have we found the solid foundation, or are there more things to come?
And my view, as I've shared with you, is I don't think this is the last shoe to drop. Celcius was a huge company, still is in business, a huge company, not as big as it used to be. And there are other smaller players that were shakier. So if this could happen to Celcius, I'm a little concerned that it will mean something negative for some of the other lenders as well. Do you share that view?
I do share that view, Rick. Look, crypto went through a massive bull market from 2018. It was trading around $3,000 for crypto. It 20x'd to nearly $70,000 by November of last year. During any major bull market, you see great companies built and you see not so great companies built. And those not so great companies are going to feel this shaking, and I suspect there will be more to collapse. Now, Celcius is very large. A real question for investors is, will we see another large entity stumble? Will we see something like Tether stumble? Will we see some of the larger sort of stablecoin protocols or other things stumble? I'm not sure that will be true, but I do think there'll be more small entities that are revealed to not be as secure, robust, and liquid as maybe they promised investors in the past.
I hate it when I'm right. Matt and I were having dinner at a conference just this past week. And what did I say was going to be the price of Bitcoin before the bottom was reached, Matt?
You did say it would trade down to $20,000 Bitcoin, and we're almost there, Rick.
And I hate it when I'm right, but I didn't think it would happen immediately, and I didn't think it would happen so suddenly. But that just demonstrates the volatility, the inherent nature of this emerging asset class, that you don't know what's going to occur in the short term, which is the reminder, the reinforcement. You can't invest in crypto with a short-term mentality. Long-term and a diversified perspective, right, Matt, is so vitally key.
That's exactly right. You have to right size your portfolio. You shouldn't have a huge amount of your wealth in crypto because it is so volatile. And you absolutely have to hold for 3, 5, and 10 years. Look, Bitcoin has gone through 70% pullbacks en route to being the best performing asset class in the world over the last 10 years. It's still up 8x from where it was even at the start of the COVID pandemic. So it remains a good long-term bet. But over the short term, volatility reigns. And as you and I just discussed, it could go down further from here. There could be more shoes to drop. So no one should be buying expecting a V-shaped recovery. No one should be buying thinking it's not a risk asset. It is. It still remains an interesting, exciting long-term prospect for the right kind of investor.
And that's why you have to take the attitude that if you bought it at 70 because you liked it, well, now that it's at 23 or thereabouts, you got to love it. And recognize that dollar cost averaging is an effective way to engage, slowly investing over long periods of time to smooth out that volatility, rebalancing a portfolio to take advantage of the new lower price by selling off other assets that may be higher in value, and recognizing, as Matt says, that it's a long-term play. I've got to acknowledge, Matt, that this sure looks reminiscent of the real estate and mortgage markets in 2007. We saw incredible amounts of leverage in the market, people buying homes with borrowed money, watching it go up in value, borrowing again to buy more property with leverage, and then we had leverage on top of leverage. It was the game AIG played, and they collapsed as a result of it, along with Lehman and so many others. Are you seeing similarities like I am to what's happening in crypto now versus what happened in real estate in 2007?
I absolutely am. You had a macro-induced shock of a falling of real estate prices, and then you saw a series of liquidity-driven cascades of failed entities. We saw Bear Stearns collapse. We saw AIG. We saw Lehman. The difference, And the uncomfortable difference for crypto investors is that the government stepped in to stop that liquidity cascade during the global financial crisis. And there is no such equivalent here, right? There is no Hank Paulson of crypto waiting to go to Congress with his hat out. So this market will need to just clear naturally. Now, I do think that will lead to a more strong foundation, a solider foundation long-term, but we have seen this before. This is a classic tail in finance. Eventually the markets find a clearing level and then they build from there. That can be a great moment to invest, but knowing when you're at that sort of foundational core is very challenging. It was challenged during the global financial crisis, and it's going to be challenging here in crypto as well.
So if you want to take a look at what's going on in crypto, look back to what happened in 2007. Look what happened to the financial markets through the credit crisis of 2008 and how they have finally, after years, emerged to an all-time high in the stock market over the ensuing 10 years. I think we may be finding history repeating itself in the world of crypto. Matt Hougan, thanks so much for joining us on the show today and providing us with that clarity. I really appreciate it.
Thank you, Rick. This was great.
That's Matt Hougan, the Chief Investment Officer of Bitwise Asset Management. You can learn a lot more about the investment strategies and the educational information along with the investment opportunities in crypto from Matt Hougan and his colleagues at Bitwise. Just go to bitwiseinvestments.com. You're listening to The Truth About Your Future. I love to bring you the latest innovations that are coming in the field of science and technology. One huge area of exponential technologies is ag tech. Ag tech? Agricultural technology. AI and machine learning can help farmers recommend when to plant and harvest crops based on weather conditions, how to tweak cropping patterns to boost crop yields, how to predict demand by analyzing population growth, historical demand, and other factors. This can all help to minimize waste and increase profits. It can also be used to identify plant diseases, detecting pest infestations, monitor soil health, irrigation solutions, reduce water usage up to 70%, while increasing yields 33%. Robots can engage in weed control to eliminate the need for pesticides and herbicides. Ag tech, one of the biggest areas of exponential technologies. Want to learn more about exponential technologies? Read my New York Times bestseller, The Truth About Your Future. Stay with us for more here on The Truth About Your Future.
This message is brought to you by Charles Schwab. No matter what tomorrow brings, some things won't change, like Schwab's commitment to see the world through clients' eyes. That commitment is why Schwab is always here for clients with clear guidance and committed service to help maintain focus on achieving long-term goals. So whatever happens today, Schwab remains invested in you. Visit schwab.com to learn how Schwab is ready to help. That's schwab.com.
The Truth About Your Future is sponsored by Global X ETFs. Listeners to this show tune in every week to hear Rick Edelman and his guests talk about the personal finance topics that matter most. And if you're retired, or soon will be, you're no doubt listening for Rick's thoughts on retirement security and longevity. At Global X ETFs, we understand you may also be interested in opportunities to generate income, with interest rates still near historic lows despite an inflationary environment. Our approach to this challenge looks beyond what you might have considered, using asset classes that include MLPs, REITs, preferreds, and dividend-paying stocks. We have been managing these types of income-oriented strategies for more than a decade, with solutions suited to a range of portfolio objectives. Explore our full range of ETFs, research and insights, and more at globalxetfs.com, or speak with your financial advisor to learn more.
Those who built their own financial success know that moving forward requires not just the right tools, but an in-depth knowledge of how to use them. That's why Edelman Financial Engines gives you a dedicated wealth planner supported by a team of experts. We know a modern wealth planning relationship demands human insight powered by advanced technology. Our advice is tailor-made for your personal goals, and our investment management approach is based on Nobel Prize-winning research. We model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. See what we can build for you. Call 833-301-4333 That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines. Built for those who built themselves.
We're continuing our program here on The Truth About Your Future. I'd like to help you understand what blockchain is, because this is the most revolutionary technological innovation since the invention of the internet itself. One of the most fundamental benefits of blockchain is that it is permissionless. Well, what does that mean? Well, we can't talk about permissionless until we talk about permission. And think about your bank. You want to open a bank account? You need your bank's permission. Do you want to create an Excel spreadsheet? Go right ahead. But do you want anybody to see it? They can't without your permission. This is how the financial system works. We safeguard our financial documents, your online banking, your brokerage accounts online. These are all protected behind firewalls and passwords and security codes. They are protected. They are permissioned. Your bank doesn't let you have an account unless they agree, and you can't get access to it unless they give you the access to that online site. Nobody else can see your bank account unless you give them permission to do so. These are permissioned systems, and they are centralized. The bank controls who gets access. A permissionless system is open. Everybody gets access. Nobody needs permission. This means the bank can't keep people out. How do they keep people out? By demanding that you pay high fees, that you have a large deposit, a minimum account before you can open a bank account. In a permissionless system, anybody can open an account regardless of where they are, who they are, how old they are, how much money they have, how much money they're depositing. Permissionless is the democratization of money. And this is helping millions, frankly, billions of people gain access to the financial system on a global basis who have otherwise previously been shut out. This is going to radically help the elimination of poverty around the world. Permissionless systems, a key feature of the innovative blockchain technology. Want to learn more about permissionless systems? Read my new book, The Truth About Crypto. Time now for everybody's favorite segment of the program, Visit by my wife, Jean Edelman. Jean is a student of the healing arts, Reiki, traditional Chinese medicine, homeopathy, acupuncture, and of course, macrobiotic and plant-based cooking. Here's Jean.
Hello, great to be with you this week. This week, my word is calm. How do we stay calm? There is so much going on in the world. There's so much going on in our lives. It's summertime, it's hot, it's just a lot. But I think we need to understand how to calm ourselves. So stretch out your arms and go around in a circle. You know what? That's about as much of the world that we can control, because that's our bubble. We control our bubble. We control our bubble by staying calm. How do we stay calm when everything around us is just exploding? And it's one easy thing, but it's hard to do, but we need to practice. And it is our breath. When things are spinning around us, we need to anchor our feet to the ground, and we need to breathe. Now you're probably saying, Jean, I breathe every day. But nope, we don't take full, deep breaths. We're going to put our hand on our stomach and our other hand on our chest. And when we breathe deep, we fill our stomach, our belly with air, and then we exhale. And so that's a full belly breath. And that's what we need to practice. Because when the kids are screaming, or there's deadlines, or when the markets are crashing, or whatever is going on in the world, the only way to get calm is to ground ourselves and to come back into our body and our breath. Because life is a test every day, and it's there to trigger us. And our learning and our journey is to stay calm, grounded in our breath, so we don't get triggered, so that we can respond instead of react. So what I want to take us through is 5 quick steps. The first is we need to learn how to breathe. The second is we need to learn to pause, because when there's something going on, we can ask ourselves, do we need to engage? Can we step back and give ourselves some space from it? How important is this to us? We need to figure out the emotions of whatever's going on. The third is we just want to give ourselves what we need. Okay, so maybe something's going on, but maybe we've stopped breathing because it's really gotten to us. Maybe we're not feeling safe, or we're super unhappy. So we just need to check in and say, hey, everything's going to be okay. Come back into grounding, come back into our breath. And the fourth is to look and observe others. Put a smile on and just share it. Share it with others. We may be feeling very flustered inside, but if we can calm ourselves and breathe and share that with others, tremendous help. And then always, always, always observe how different we feel after we have taken our big breaths. And so we can only control ourselves. And so my word of the week is calm. The C is for courage, the courage to know ourselves. Listen to what we need versus getting pulled into whatever the fray is around us. The A is for affirm, to declare, proclaim, and pronounce what's important to us and stay in our truth. The L is to listen to our body, our mind, and our intuition. Our intuition is the greatest key to what we need. And the M is for mindful. Create the time that we need. Don't be rushed. Instead of multitasking, stay in the moment. The best way to do that is to come back to our breath. And so practice staying calm this week. Let's put positive, happy, kind out into the world. It's much easier to do when we're calm. Have a great week, everyone.
If you're enjoying Jean's Words of the Week, you can get a list of them and all of her segments at thetruthayf.com.
Time for a cool change. I know that it's time for a cool change.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
Allow us to introduce you to Tom, an ordinary person who helped shape the future by putting his money behind the right ideas. Tom enjoys tending to his tomato garden and is currently developing the perfect blend for his homemade spaghetti sauce. Tom is also accessing companies that help change the course of the aerospace industry by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a rocket scientist to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
Thanks for joining me on the program this weekend. Hey, if you're bored with Netflix, I got a better program for you. My master class on crypto. It'll teach you in under 2 hours everything you've always wondered about what is blockchain and digital assets. My master class premieres this Tuesday, June 21st. It's free, available to you anytime at thetruthayf.com. See you next week.
Bye-bye.
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 I'm sorry, what? What part didn't you understand? The buh or the bye? Bye-bye.
The Truth About Your Future with Rick Edelman has been brought to you by Bitwise, the world's largest crypto index fund manager. As crypto grows, Bitwise believes everyone should have a simple and familiar way to access it. Bitwise makes crypto clear. BitwiseInvestments.com. And by Global X ETFs. For more than a decade, Global X ETFs has been dedicated to providing investors with unexplored and intelligent solutions. Learn more at globalxetfs.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100. Invesco.com/QQQ. Stay tuned for Everyday Wealth with Soledad O'Brien and Gene Chatsky from Edelman Financial Engines. Everydaywealth.com/radio. EFE and The Truth About Your Future with Rick Edelman are unaffiliated entities.
Get the truth about your future every weekend with Rick Edelman. It's thetruthayf.com.